MSTY is collapsing, down 50% from its peak in July and now down almost 30% year to date, while the S&P 500 is up over 15% and Bitcoin is up over 5%. Even worse for income investors, the dividend payments are down 83% from a year ago. So let's talk about what went wrong and where you can go from here if you own it. I've never owned this myself, but I feel for the people who did. Trust me, investing is hard, and this kind of thing happens to everybody, so don't beat yourself up about it. Our mission at Fundamentals of Finance is to help people drastically improve their lives by becoming better investors, which is why we put out warnings 8 months ago, 6 months ago, and 4 months ago about MSTY. But unfortunately, not everybody saw those in time. If you did get out while it was up because of one of those videos, please let us know in the comments because we love to hear success stories like that. If you didn't, let's briefly recap what went wrong so you can avoid making the same mistake twice, and then we'll talk about what the future looks like for MSTY and its investors. One of the things that I've learned in my investment career and through becoming a chartered financial analyst, which I try to teach the subscribers of this channel, is how to spot BS in the investment world, like when something is misleading or too good to be true, or vice versa, honestly. Not much annoys me more than fear-mongering clickbait, but I digress. The MSTY videos we did were there to try to help investors see MSTY's hidden flaws that were likely to make it turn out to be too good to be true, or more specifically, quote, end in tears, as we said in our first video. But I understand, to the untrained eye, MSTY looked really promising with its 100+% yield and massive short-term returns as of when we did our first video on it, and it had pretty much only positive coverage in the media. But when I looked at it through the lens of a career investment professional, I called it quite possibly the worst investment I'd ever seen out of thousands I'd evaluated over the course of my career. The risks that I highlighted in those videos are pretty much exactly what has brought MSTY down. There were two primary issues. First was the premium that strategy stock traded at relative to the value of its assets. Here's what we said in our first video. At its peak in November, strategy stock was trading at over 3.5 times the value of its assets. Now it's more like 1.66 times the value of its assets. So that premium has come down significantly. But even then, it is still, from here, a huge source of potential risk for strategy stock and then, by extension, for MSTY. And that 1.66 times the value of its assets, or a 66% premium that it was at when we made that video, is now down to about an 18% premium to the value of its assets, meaning its Bitcoin holdings. The loss of that premium explains a lot of MSTY's downside since then. Why did the premium keep coming down? Well, as we explained in our first video, many asset managers, like mutual funds, for example, can't buy Bitcoin directly or Bitcoin ETFs. MicroStrategy is the only way they can get access. Or is it? Well, not anymore. Now there are at least 6 companies doing the same thing, which means I'm not sure how much higher the premium will go. It will probably continue to be volatile, but over time, I would assume it would generally turn lower, which would be a headwind for strategy compared to Bitcoin. And that's exactly what happened. They lost their scarcity premium, and the lower this premium goes, the harder it is for them to accumulate more Bitcoin per share. So their advantage could keep eroding as more alternatives to get Bitcoin exposure keep popping up. But the second problem we highlighted was even bigger, in my opinion, and that has more to do with the structure of MSTY, which sells covered call options on this highly volatile single stock to generate its misleadingly high income. Here's how we explained it. The reason I think MSTY is such a flawed strategy is because even if Bitcoin and strategy do really well in the long run, MSTY can still fail you miserably, especially if you're relying on the income in retirement. The reason it can fail, even if its underlying investment succeeds, comes down to its structure as a covered call ETF. Like we highlighted in our first video, the website says right there in the fine print that MSTY caps the potential gains when strategy stock goes up, but is subject to all of the potential losses the strategy stock goes down, which may not be offset by the income received. That's where the main issues come in for anyone hoping to actually take out the income. A lot of what they call income is really just them giving investors their money back. ROC, which you can see there on the upper right, means return of capital. When an investment pays out more than it earns, it's treated as return of capital, which means you don't pay taxes on it because you didn't actually make any money. They just gave you your money back, essentially. So, since the fund is paying out more income than it's earning in returns, its NAV will inevitably fall over time. If you reinvest all of your income, that's not really a problem. You'll just own more shares at a lower share price. Whether you own one share at $20 a share or two shares at $10 a share, doesn't really matter. You got 20 bucks either way. But if you're not reinvesting the income, then it becomes a real problem over time because the NAV is bound to fall and the income payments are just a percentage of the NAV. So if the NAV is falling and the income payments are a percentage of the NAV, that means the income will fall over time. So even if the yield percentage stays similar, the yield in dollars, which is what investors actually spend, that's what really matters, that will decline. That is why the income has fallen over 80% in the past year. What I showed you at the beginning of the video was the total return, meaning with dividends reinvested. The actual share price change, which more closely reflects the NAV, was actually down 68%. So that's happened, but what now? Well, real quickly before we get to that, if we helped you avoid losses with those prior videos, or maybe you wish you'd seen them earlier or wish you'd listened to them, and you want to be notified of future risks and opportunities that we identify, now would be a great time to hit that subscribe button. We created this channel to help people significantly improve their lives by becoming better investors. And those warning videos are just one example of many times that we've done that. Sure, it would be great to go back in time and not have made all our past mistakes in life, but since we can't, the best thing we can do is learn from them and maybe avoid the next one. Hit that subscribe button and we'll do everything we can to help you do that. Okay, let's dive back into MSTY. What's next? Well, as far as the income goes, this is a structural issue with MSTY and really all covered call ETFs, which is made worse when they, one, are based on a volatile underlying asset, and two, pay income more frequently. This is based on a single stock, which is basically a leveraged Bitcoin position, and it just switched to weekly payments, hence why I said it was possibly the worst investment I'd ever seen. The income is pretty much irreversible. If you need to take income out, I would highly encourage you to avoid MSTY and all other covered call ETFs with volatile underlying investments. It just mathematically can't work out in the long run unless the underlying investment keeps going up forever with virtually no volatility. But if it did that, then you'd get very little yield on your covered calls. So either way, it would probably disappoint you. If you're reinvesting the dividends, this can recover, but I would question why you would own this instead of just buying Bitcoin or a strategy stock. The covered calls cap the upside and don't cap the downside. So the only way that MSTY would beat strategy stock in the long run would be if the stock doesn't move around very much, which is just simply not something you can realistically expect from a leveraged Bitcoin position. If I owned this and I wanted to have exposure to strategy stock or Bitcoin on the view that they'd recover, which is totally possible, by the way, I would much rather just own strategy stock or Bitcoin to capture that recovery. Now, of course, I'd be remiss if I didn't mention the potential that Bitcoin could fall much more than it has before. We've seen this many times in the past. And if that were to happen, there could be significantly more downside in MSTY. So I've got to throw that out there. I'm not making any price predictions here, but I just want to be clear that that is also a possibility. Now, to sum it all up, for income investors, I think MSTY is basically hopeless in the long run. For investors who plan to reinvest the dividends, I think MSTY can recover, but I just think there are better options to capture that recovery, like investing in strategy stock directly. If you found this video helpful, let us know by leaving a like, drop a comment with what you'd like us to cover next, And be sure to hit the subscribe button on your way out so you won't miss it. Thank you so much for watching, and we'll really look forward to seeing you in the next one.